Hey everyone, it's Jon Tetrault here with the Slocum Home Team at eXp Realty. One of the biggest questions we're hearing right now is this: are mortgage rates finally coming down in 2026? And right behind that, people are asking, should I wait? Should I make a move now? So let's try to cut through the noise and talk about what the data is actually telling us, especially for buyers and sellers here in Rhode Island. Here's the headline that you really need to know and pay attention to. Experts are not predicting a return to the 3 and 4% mortgage rates in 2026. What they are predicting is stability, with rates settling in the low 6% range. Across more than 20 major economists and housing research groups, the average forecast for 2026 rates is about 6.18%. Most projections land somewhere between 6 and 6.4%. There are a few more optimistic predictions dipping into the high 5s, but there are also more cautious ones pushing into the mid 6s. But here's what matters. No one credible is calling for a dramatic drop. This isn't about rates crashing, it's about rates normalizing. So why aren't rates falling faster? A few key reasons. First is inflation. That's cooled, but it's not fully under control yet. Long-term rates don't fall fast until inflation is clearly beaten. Second, the economy's slowing, but it's not collapsing. That means the Federal Reserve doesn't need to aggressively slash the rates. Third, and this is most important for you to know, mortgage rates don't directly follow the Fed. They track the 10-year Treasury bond. So even if the Fed cuts short-term rates, mortgage rates won't move unless the bond market follows it. There's a bright spot, and that's the spread between bond yields and mortgage rates. Those could tighten. If that happens, borrowers could see a little extra relief. But again, we're talking gradual improvement, not fireworks. So if you're a buyer, here's the reality. Low 6% rates are meaningfully better than what we saw in 2022, 23, and parts of 2024. Affordability improves, not overnight, but steadily. And here's the mindset shift that matters the most. Waiting for rates to drop isn't a strategy anymore. The buyers who want to win in 2026 will focus on how they buy, not when they buy. That means using things like seller credits, rate buydowns, negotiation leverage, and smart loan structuring. Strategy will beat timing every time. Now, sellers, what does this mean for you? This is the good news. As rates stabilize in the low 6s, more homeowners will start to feel comfortable moving again. That golden handcuffs effect from ultra-low rates begins to loosen. We don't expect a flood of inventory, but we do expect a healthier, more balanced market. Now, with that said, pricing and presentation will matter more than ever. Buyers are still payment conscious. Homes that are priced right and positioned correctly, they're going to win. Homes that chase the market will sit. This is not a frenzy market, but it's a fair market if you play it right. So what are some wild cards? Could rates go lower than expected? Yes. If we see a sharper economic slowdown, faster inflation cooling, major global disruptions, or another global pandemic. But right now, those are possibilities, not probabilities. So the most likely scenario for 2026 is steady rates, modest improvements in affordability, and a market driven by smart decision-making instead of speculation. So here's the real takeaway. Mortgage rates in 2026 are likely to hover around 6%. Affordability should improve gradually, and success for both buyers and sellers comes down to strategy, not guesswork. So if you're thinking about making a move in Rhode Island next year, don't build your plan around the headlines. Build it around the numbers, options, and have a clear game plan in place. If you want help doing that, reach out. Let's build a strategy that fits your goals.